Hello, and welcome to Spotlight on the Divorce Expert. Today, I'm talking to Stacey Ellison, who is a certified divorce lending professional and a divorce mortgage planner. And we're going to talk all about mortgages and refinancing, which are always big issues in divorce. And unfortunately, Stacey and I were just talking. I have seen a lot of settlements where crazy stuff has been put in the divorce decree about the mortgage or about the property that absolutely cannot happen in the real world. So, Stacey, welcome.
Thank you, Marty. Happy to be here. Thank you for having me.
And I am so glad to have you as well, Stacey, because like I said, I think this is such an important topic. So before we get into kind of the meat and potatoes of what we want to talk about here, tell me a little bit about why this is your area of expertise and how you got into the whole divorce area of mortgages.
Sure. So I've been in mortgages pretty much my whole career. Was a processor, loan officer, account executive, whole nine yards. And there was a period of about 6 months where I had several clients coming to me who had just been divorced. And they're like, I have 60 days to refinance and take my spouse off. Here's my settlement agreement. And for one reason or another, every single one of those had issues. Or it couldn't even be done because when a divorce is present, mortgage guidelines change. And there are certain things that have to be met, like stability and consistency of the income, which is the biggest one. And they have to qualify, and a lot of times income, for whatever reason, isn't usable. And there's a whole bunch of different issues. And it got me curious and frustrated because I don't like not being able to help people. And I was like, there's got to be a solution. What is it? And I researched and I came across the Divorce Lending Association, and they had a certification for divorce, certified divorce lending professional. I was like, oh my God, this is perfect. I need this. I did it. And so I've been certified since 2020, right before COVID. And been working with divorcing homeowners and divorce attorneys, mediators, financial planners, accountants, everybody that is on the divorce team to help ensure that the settlement agreement aligns with mortgage guidelines, because what might be an option legally isn't always an option when it comes to mortgage financing.
Yes. And I think we need to yell that from the rooftops. Just because it says in your divorce decree, you get to keep the house. Your lender does not always look at that and go, oh, well, let's just give the house to Mr. and Mrs. Smith because, hey, the divorce decree says it doesn't happen that way.
He said that right. So your lender is not part of the divorce process.
Yeah. And I've actually heard from lenders that divorce situations are quite often some of their higher risk things, especially if the alimony or is being used, or spousal support is being used as part of the income, because there's nothing to stop a person from just stopping those payments.
True. But you know what? On the flip side, when you go for a regular mortgage, you have to show employment history, and there's nothing to prevent you from quitting your job.
Right.
Or being fired. So, yes, it's a risk. I don't know that it's seen as any riskier than any other type of employment.
That's interesting.
Or any type of income source, because really anything could stop at any time.
Sure. Yeah. And I think the mortgage provider I was talking to said, well, if you get fired, at least you can get unemployment, or you've got some kind of insurance coverage that will kick in. Not always, but sometimes. But one way or the other, in most cases, not always, sometimes the house will be sold because neither person either wants the home or knows that they can afford it on their own. And that's I think that's getting to be more of a reality, particularly for younger couples who may have student loans and debt and a mortgage and maybe young children. It's really hard in today's economy to do that, living on a single income. So what about this whole idea, though? You get the home in the divorce, you're looking at refinancing. First of all, can you tell us about how are mortgages assumable, and how does that work? And then
Right.
if you can't assume, what do you have to do what should you know about refinancing?
Sure. So the first thing to realize is that if you're going to keep the house, it's not just as simple as calling your mortgage company and asking to remove your former spouse. They don't do that. Um, and if you're buying out their interest, you cannot take any money out and do an assumption. So if you are going to assume a loan, and honestly, the only loans that are assumable on paper are FHA and VA loans. Conventional loans, if you go back and you look at your closing disclosure, will say that it's not assumable. However, many investors have realized that divorce is a life event and they may allow a conventional loan to be assumable. Now, to do that, you'd have to find out the requirements from the lender, apply, provide all the documentation, and they may or may not approve it. It's up to them. It could take 45 days. It could take 8 months. It's a difficult process for like the average person to do and manage and go through. It is something that, as a divorce mortgage planner, I can help people with, but that's after the divorce. However, there's no guarantee that it's going to get approved. And if you do an assumption and you have to pay your ex-spouse, out for the equity buyout, that has to come from another source, another asset. You can't take money out and do an assumption. So that's very important to understand. The second thing is that if you are going to do a refinance to take the money out, there are two types of refinances. There is a rate and term refinance, which an equity buyout is classified as. Okay, and then there's a cash out refinance. So with an equity buyout refinance, you would pay off the existing mortgage, closing costs, and whatever the equity buyout amount is to the vacating spouse. You cannot take any more money out. Okay. I get a lot of people who want to consolidate debt through the process because property values have skyrocketed and they've got a lot of equity. And if they've got credit card debt, it's a good time to possibly consolidate. And you can do that. That's a cash out refinance. Now, what's the difference? A rate and term refinance or an equity buyout refinance will allow access to 95% of the value of the home. Okay. A cash out refinance will only allow access to 80% of the value of the home.
Okay.
So for clients who have a lot of equity, doing a cash out refinance could be a good opportunity to consolidate debt, give the vacating spouse the money that they want, and as long as they qualify, right? Also, the rates on a rate and term refinance are usually a little bit lower than a cash out refinance. Okay. But if you've got let's say they've got 30% equity in the home, right? And they have to give, the retaining space has to give 15% out, they cannot do a cash out refinance because there's going to be 5% equity that they don't have access to if they can only go to 80%, right?
Right.
So these things, sometimes whether someone qualifies has to go with the cash out or a rate and term or the equity buyout. Sometimes these factors have nothing to do with credit score, income, assets, or anything. It's solely based on the property. So it's very important to figure out not only can you qualify for a refinance, but what kind of refinance is it going to be? What does it have to be? How does that refinance fit within the structure of the settlement agreement and underwriting guidelines, and where is that overlap and what's going to be a conflict there? Does that make sense?
Yeah, and it's a very it's a very detailed area of the divorce, and I don't think it's something like, it's not something you read a blog and go, oh yeah, this all makes crystal clear sense to me.
It's clear as mud.
Yeah, like the more I speak with you and the more I think, okay, I got a handle on this, then it's like, oh no, there's more details. It really seems like you really have to look at the individual situation, the individual finances, the property, and then the type of mortgage that's there, what they want to do moving forward. It almost seems to me, honestly, Stacey, the more that I hear about these, it's almost just better to sell the house and both people just start all over again. If there's, when it comes to actual, the process involved is much more complicated, it seems.
It is, but it's not, because let's look at that scenario. Let's say they are going to sell the house. Well, they each have to qualify for a mortgage if they're going to buy something.
True.
And if that's the case, you've got the same issues going on as you would, because you would have to qualify for the assumption or you would have to qualify for the refinance. Now you're just looking at qualifying for a purchase. So I see where, yes, you're like, oh, let's just sell it, but then you're going to have the same issues on income and debt and all of that going for the new mortgage as well. So utilizing divorce mortgage planning can make this process, whichever way you go, so much smoother, because it's going to provide a plan and be able to, if I'm able to make suggestions to the settlement agreement, right, whether it's wording or structure of alimony or child support or assignment of debt or assets in a way that works for the couple and allows for financing for whoever is going to need it afterwards, then that's the whole purpose of divorce mortgage planning and why someone should utilize it, because it's going to protect your mortgage financing after the fact.
Yeah. And that's very true. And I know that sometimes during your consultation with the couple or the individual, you may also be helping that person or that couple be able to qualify if they do want to. And typically one person's going to keep, I mean, not always, but quite often one person will keep the house, typically, and especially if they have kids. I think a lot of people want to stay in the home if they have kids. And then the other spouse now has to go out and, like you said, they either have to rent or they have to purchase or live with their parents or their friends or something for a period of time.
Right.
But even if it's not specific with this property, you can help people understand what they need to have to qualify to make a purchase.
Yeah. So, I provide my clients with, and their divorce team with a divorce mortgage planning report. And that report can break down refinance and equity buyout solutions and scenarios, or purchase scenarios. I could do both. So, and many times we start off with, oh, I'm going to buy the house, buy a new house. Oh no, I want to keep this house, or vice versa. Go from wanting to keep this house and running those scenarios. And you know what? What if I buy something else and play around with the numbers? So it's really about getting educated and prepared, so someone can make informed decisions and ensure that they can be mortgage ready when the process is all said and done.
Yeah. Yeah. And I don't think a lot of people know that there are certified divorce lending professionals. Would you say that people typically don't even, or they're not aware that this valuable resource is there?
That's certainly fair. The Divorce Lending Association, it has been around for about 10 years. So I guess relatively speaking, it's more of a newer profession. And depending on the area, I know there are areas of the country where it's very common and well known, and then there are other areas where it's not. So it's very often something that people are not familiar with.
And that's why I really wanted to have you come on this show, because what we're trying to do here is spotlight divorce professionals that you may want to consider. Not you personally, Stacey, but people listening. I
know you consider.
I do want to ask you, do do you see that there's like, do you mostly get high, I'm just going to say high asset couples where, they may have the larger home, or do you tend to work with just regular people that may have a smaller home and maybe, the struggle is real, whether you got a lot of money or a little bit of money, it's still a struggle when it comes.
Absolutely. It's I work with anybody. I work with everybody. Because if there's real estate involved in a divorce situation, you you need divorce mortgage planning. That's as
Yeah,
simple. That's whether your house is worth 200,000 or 2 million. It doesn't matter. You still have to make educated decisions. Make sure that whatever you want to do is achievable and financially sustainable.
right.
What's the point of keeping a house if in 6 months you don't have money to pay the bills and
Yeah,
then you got to sell, right? I mean,
yeah,
those are not easy conversations, but the numbers are the numbers. And, it's people's long-term financial stability that I want to protect.
yeah,
And if I've got to be the bad guy and be like, look, there's no way you can qualify to keep this house.
yeah,
Let's look at what you can qualify in terms of a new purchase, so you get to start all over.
right.
You know, it's that's going to take a minute for people to wrap their heads around, and better to do that earlier rather than get the settlement agreement, get awarded the house, and then find out that you can't qualify
Yes.
and you have to sell. That you've been through it and now you're going through it again.
Yeah.
Let's
And
let's
then you
set you up
really,
for success.
yeah, and you really do feel, I'm just going to say it because I've had clients that have, we talked about this just a little bit ago. I've had clients that have been in this exact situation where they've been awarded the house, they can't qualify, they ride it out as long as they can, and then they're basically, they're either looking at foreclosure or a short sell or whatever, just selling it as quickly as they can.
And that's so much harder to recover from.
Yeah, and
Like,
they feel betrayed. They feel betrayed by the legal system. They feel betrayed by their advisors. They feel betrayed by
100%.
their partner. Like somehow their partner knew they couldn't qualify. And it's just because nobody reached out to a professional that could have provided that information, which is exactly
Right.
what you
Figure
do.
out
Yeah.
figure out your options ahead of time.
Yeah.
Absolutely.
Now, there is one question, and I firmly believe, and now I'm going to talk to my client, all of my clients, about going to a CDLP if there's any property involved. A lot of times people now are recognizing that they need a CDFA, a certified divorce financial analyst.
Financial
Can you
analyst.
just, and they are an excellent resource. Can you just explain a little bit about how your services, just so people are clear, how your services differ from a CDFA?
Oh, sure. So, CDFA is a financial planner who knows everything about divorce and can help someone basically figure out what they can afford, right? How much income are they going to have? How much debt are they going to have? Are they getting any assets awarded from the settlement agreement? And what are you going to do with them? Is there a quadros or a retirement fund? Like that's all them. I am strictly house. Okay. What are we going to do with the house? Can you qualify to keep it? Do you have to, how are you going to equalize the equity? That kind of stuff. I work with CDFAs very closely because a lot of times they'll be, if there are assets and like retirement funds, liquid assets, investments, and the house, we can work together to figure out how to equalize them to make everything work out, one way or the other, whatever the goals are. Also, I work with CDFAs and financial planners in general when we have to like create income. If you've got the retaining spouse who's keeping the home, maybe they haven't worked in 10, 15 years, right? And they're getting a large distribution, right? But which is great. You got a lot of money in your bank account, but you don't necessarily have any alimony or child support because with the change in the tax laws, many people are giving lump sum distributions for alimony and child support instead of monthly payments. Great. You got a nice big fat bank account, but you got no monthly income to qualify for a mortgage. Well, there are strategies and loan programs that can use asset depletion or distribution. So I work very closely with the CDFAs to set the accounts up, set those assets up, and the distributions up in a way that will be okay with underwriting guidelines, because there are a whole lot of requirements that have to be met in order to do that. So, like we both work with assets, but I'm specifically the house, they're everything else.
Yes, I love that. Thank you. Yes, no, and thank you for clarifying that, because I just know that sometimes people look at it and go like, oh my gosh, why do I need this many professionals in my divorce? Used to be in the good old days, we just went and hired an attorney and everything got done. It never worked that way in the good old days. And I think it's really important for you to take advantage, for you to know what professionals are out there, and then make the decision, should they be brought in for your divorce. And I really do believe if there's a home involved and if there's any question of somebody not being able to qualify for a mortgage, in other words, you're both not high income earners that have worked for the last 10 years and you have, all of this great income coming in. If you're not in that position, you really do need to talk to somebody who specializes in this. So, Stacey,
I think even those people who do have a ton of money and a ton of properties and a ton of assets, they still need to do divorce mortgage planning, because they got to make sure that the distribution is equitable and that they're still going to qualify for whatever they're going to get. It's the same issues regardless of the economic level or the asset level and all of that.
Great point, Stacey. Thank you. So I want to just allow people or give people the opportunity to reach out and talk to you a little bit more. What is the best way if they want to just find out more about this whole idea of divorce mortgage planning, and they want to learn, or they want to work directly with you? They already know, I need to talk to Stacey about this. What's the best way to do that?
My website has all my information, ways to contact me. My website is divorcemortgagesolutions.biz.
Wonderful. And I will make sure that's in the show notes. Stacey, thank you so much for sharing your expertise. I know we just scratched the surface. We'll probably have to have you back on for another one and talk a little more in depth about different aspects of this, because I think this is not something you should rush into, that decision about what to do about the property. So thank you for your expertise, Stacey.
My pleasure. Thank you, Marty. It's been a pleasure. I had so much fun speaking with you today. Thank you.
And I know that people are sitting there going, never thought of that, because I know I'm sitting here going, never thought of that. So if you're listening, thank you so much for spending your time with us today. Don't forget to hit the button to like and subscribe to the channel, and tune back in for the next Spotlight on the Divorce Expert.